Governor Rajan leaves with a word of warning on inflation. In his foreword to the annual report, he says there is an upside risk to RBI's inflation projection of 5% by January and that there would be room for further rate cuts only if inflation projections fall. However, on growth, he is hopeful that consumer demand post a good monsoon and the pay commission can trigger a virtuous cycle of growth. Ritu Singh has the highlights of the annual report of the Reserve Bank of India.
Days before he vacates office, outgoing Governor Rajan has outlined the agenda or areas which are work in progress for the RBI. In the foreword to the annual report, Rajan says economic growth, while showing signs of a pickup, is still below levels that the country is capable of, and the key weak point remains subdued private investment. Second, the governor points out that inflation levels are still at the upper limit of RBI's inflation objective, and any room to cut policy rates further can only emerge if inflation is projected to fall further.
Well, if there are no rate cuts, it will definitely not be a positive. I don't see it as a big negative because frankly speaking, 25 basis points this way, that way is not going to stop any projects. But the fact of the matter is a rate cut is more like a signal. It brings back more confidence to the economy. Going forward, we do see the rates drifting down a little. At least both the deposit and the lending rates will drift down further, even without a rate cut.
We are indeed penciling in another 25 basis rate cut, sometimes this calendar year itself. But I think there is caution warranted on the inflation front. I would agree because food inflation has been something which is an idiosyncratic risk, and it keeps playing out again and again.
Third, he says transmission of rate cut by banks remains muted. While the weak corporate investment climate has reduced volumes of new loans, their stressed assets have tightened capital positions, which may prevent these banks from lending freely. But it's not all gloom and doom. Governor Rajan says expectations of a good monsoon, coupled with more money in the hands of government employees, should boost consumption demand. Further, a virtuous cycle of growth would be possible, reinforced by anticipation of coming benefits of reforms like the GST in Parliament. Back on inflation, the governor reiterates that the RBI's focus would be to bring down inflation towards the government-set target of 4%. The RBI would also continue to work with the government and banks on speeding up the resolution of distressed projects and completing the cleanup of banks' balance sheets. Over the medium term, the report highlights the need to increase efficiency through greater entry and competition, more efforts to strengthen public sector banks, and stepping up risk management efforts. He also hopes that incipient reforms in labour and land sales can improve productivity. In Mumbai, Ritu Singh.